we discussed that in the framework, there are three things. In the framework incorporates three things: objective, qualitative characteristics, definition, recognition. Objective, the financial statement should be giving true and fair view to the user so that the users can take informed decisions. Qualitative characteristics, what are the characteristics should be incorporated into the financial statements? The characteristics which are to be incorporated in the financial statements are divided into two parts. One is fundamental qualitative characteristics, two fundamental qualitative characteristics, and four enhancing characteristics. Two fundamental qualitative characteristics and four enhancing. Suppose I will say that the purpose of our classes that the students should be liking the classes, the students should be able to give exams, should pass the exam, should get the practical knowledge. Purpose. But the characteristics of our classes, that the classes should be covering the entire syllabus, the classes should be detailed, the classes should be solving the mock papers, so that you are getting the benefit of the classes. तो वैसे ही मैंने अभी बोला कि users will be able to take informed decisions when the assets, liability, income, expenditures, equity are properly presented. Now, the characteristics is also related with the elements, with the assets, liability and all that. But technically, what the accounting body says that in the financial statement, what should be the characteristics included? Fundamental characteristics are two: relevance and faithful representation. Relevance and faithful representation. Forget what is written. Think logically what can be the English meaning of relevant. Relevant for this. Whatever I am teaching relevant for our syllabus, whatever I am teaching relevant for you to pass the exam. That means if whatever is taught in the class, there is no relevance with the syllabus, then the characteristics is lost of the classes. Similarly, whatever assets, liability, income, expenditure, equity presented in the financial statements, they should be presented relevance. What is relevance? Information is relevant when it influences the economic decision by helping them to evaluate past, present or future events, confirming or correcting their past evaluations. Relevance, we also say that something is omitted. An asset or a liability or an income or expenditure not incorporated in the financials, but which is very important, which is not a small thing. Or maybe it is not presented properly. Assets presented under a different heading, liability presented under a different heading, it is not summarized properly. Then the financial statement will be losing its relevance. So relevance, omission of something, or misstatement of something which is material, which is important, is relevance. Information is relevant when it influences the decision of the users, past, present, future, or confirming or correcting past evaluations. If I will take an example, suppose we are recording in balance sheet all the assets, non-current assets, current assets. In current assets, we are recording inventory, receivables, cash and bank balance. Is it essential that we need to record cash and bank separately? Or I can mention in the balance sheet assets, cash and bank together. Suppose in Saraf Academy, cash and bank balance 10 lakh. Do I need to report how much is cash, how much in the bank? Or can I report cash and bank together? It is a question of relevancy. If you remember, maybe in your case it is difficult, in around 2007-8 or maybe earlier, I don't remember, 1 or 2 years, Satyam Incorporation was a company in India, Satyam Limited, which is presently taken over by Tech Mahindra. Satyam Incorporation, Satyam Company Limited has cash and bank balance. Okay, they recorded in the balance sheet cash and bank balance together. But actually the cash and bank balance which was reported in the balance sheet was wrong. Because because the bank statement, the bank will confirm this is the balance in the bank. Bank has given me the balance of 30th March. My year ending is 31st March. And in one day I have withdrawn all the money. That means I am recording the 30th March balance, but actually 31st March there is no balance. And I am making bewkoof to the auditors and others. That problem arises in Satyam. From that day, in India, in Indian accounting, it was made a rule that cash and bank balance should be separately reported. You can't say cash and bank together. You need to say cash how much, bank balance how much. It is cash and bank balance, but in the notes to accounts, you need to give breakup. Then at that time, Infosys communicated that even though there is no law, but still we are always reporting since our inception, always cash and bank balance separately. That they were saying to the shareholder how much relevance we are. Again, relevance means suppose there is a loss by theft or loss by fire. Is this a normal event? Is the loss by theft or fire happens regularly? No. Sometime. So the relevancy says that its affect positive, negative or anything should be reported separately. So that the users can take informed decisions that it is irregular activity, irregular income, irregular expenditure, it will not arise again. They will be able to take informed decisions. What is relevant or not relevant depends upon entire accounting knowledge. But the financial statement should be prepared by the fundamental principle of relevancy. Faithful presentation. If information is to present faithful, the transaction and other events that it purports to represent, transaction must be accounted for and presented in accordance with substance and economic reality. In accordance with substance and reality. We always say that accounts is not prepared on the basis of legal aspect. We follow legality, but there are many things which are recorded in accounts which are not legal, which are not illegal, but as per legal requirement they don't fall. As I said, I have taken an asset on lease, rental basis for 10 years. I am not the owner. So normally legal wise, I should not be reporting in the balance sheet as an asset, but accounting says that the faithful representation, you should be recording that as an asset. Because you have control, you have present control, you are going to get economic benefits, kahe ko nahi likhenge. Against that you need to pay lease rent. So lease rent should be recorded as a liability. Lease rent you need to record liability even though legally baat alag hai. But the substance says that the asset and liability should be reported. So faithful representation means everything, assets, liability, income, expenditure should be reported with faithful way, with economic reality, not thinking about legality or illegality. Then only the financial statements will be giving information to the users and the users can take informed decisions. These are treated as fundamental qualitative characteristics, relevance and faithful presentation. But there are others for enhancing qualitative characteristics. Enhancing qualitative characteristics. Comparability, verifiability, timeliness, understandability. Comparability. If I am preparing PL account, balance sheet, summary in a different way, you are preparing in a different way. Somebody, कैसे compare करेंगे? How the shareholder will be taking decision where they should invest? How anybody, any users will be able to take decision? So the financial statement should be prepared by following same principles, same guidelines so that they can be compared with each other. Verifiability. There are two types. If there is an asset, suppose in my balance sheet this computer is there. Can I verify this computer belongs to Saraf Academy? I can check the voucher. I can check the voucher where I can check the voucher where I can see that what I should say. I can check the voucher where I can see that this computer purchased by Saraf Academy this date. That is called the direct verifiability. With the documents, going into the documents we can check. There is indirect verification, means checking inputs. Verification can be direct verification, verifying an amount through direct observation. Actually direct means if I am seeing in the balance sheet computer, I can see computer is there. But indirect verification means through the records, through purchase voucher, through journal, through ledgers, through systems, which we will be checking, that is indirect verification. But whatever is coming in the financial statement, assets, liability, income, expenditure, they should be verifiable. Timeliness. If my year ending is December 2021, and up till now I have not prepared my financials and all that, कब बनाएंगे? जन्म खत्म होने के बाद. So if they are not prepared timely, there is no use. Now generally in developed country, UK and all that, the time is 4 months to 6 months. 4 months ही होता है, 3 to 4 months. In India, the time is 6 months. The time is longer for preparing financials, but normally they should be prepared in a proper time so that users can take informed decisions. Understandability. Now it is suppose one financial statement I am reading. What I can understand, what you all can understand is a very big difference. I am not saying I am champion, but I am better than you, so much experience. Maybe somebody is better than me. He will be able to understand something better than me. That doesn't mean that we will compromise on understandability if it is not understandable to common man. All the things presented in the financial statement so that the users can understand. They can see, they can understand what has been done. Because if it is compromising on understandability, then there is the characteristics of financial statements. The users cannot take informed decisions. So, enhancing comparability, verifiability, timeliness, understandability, and fundamental relevance and faithful representation. For the time being, to all of you, it is looking as theory. But when I will be dealing different topics, जो टॉपिक करेंगे मैं बार बार इनको कोरिलेट करते रहूंगा. Whenever we will be doing any recording of transaction, sale, purchase and all that, whenever we will be doing any IS, IFRS, whenever we will be doing summarization, we will always correlating the assets, liability definition. We will always correlating the characteristics, because then only you will be able to understand what is the practical implication. And then you can say, other than these fundamental and enhancing characteristics, there is something called other important accounting concepts, which are not exhaustive list. Materiality, substance over form, going concern, business entity, accrual basis, prudence, consistency. One by one. Materiality. As I said earlier, relevance. I said that whatever is relevant should be recorded properly. That materiality is related with relevance only. Suppose in my company, every day there is some staff, tea, coffee and all that, about 100 rupees. So should I record in my balance sheet, PL account basically, tea, coffee expenditures, 100 rupees every day. लिखता होएगा, staff records में लिखता होएगा, but generally it is office maintenance. Office maintenance में there are many things, tea, coffee and all that. In office maintenance, if there is any asset out of order, उसको rectify कराए, anything. तो ऑफिस मेंटेनेंस में साल में मान लीजिए देयर इज 2 लाख एक्सपेंडिचर. बट नाउ इट इज नॉट पॉसिबल टू रिकॉर्ड 100 रुपीज इन टी कॉफी ऑन 6th of May. ऐसे पॉसिबल थोड़ी ना. इन द बुक्स ऑफ अकाउंट्स आई कैन फाउंड, बट इन समराइजेशन मेटेरियलिटी वी नीड टू मेंटेन. नाउ व्हाट इज मटेरियल इज वेरी डिफिकल्ट. हियर इट इज नॉट रिटन. नॉर्मली वी से, नॉर्मली 1% of sales or 5% of profit or 2.5% of assets, we can say material. हम लोग उसको material बोल सकते हैं. It is just normally nowhere written anywhere in the world, in India or US, UK, कि भाई इसको material बोलेंगे. There is no definition. But we generally say that if any item 1% of sales or more, any item 5% of profit or more, any item 2.5% of assets or more, that can be treated as material. Material items should be recorded separately, should not be mixed with others, because their importance on the financials is very huge. So if they are not reported separately, I cannot understand the financials. I will not be able to take informed decisions. An item is recorded as material if it's omission, या तो रिकॉर्ड ही नहीं किए. मिसस्टेटमेंट, omission means not recorded, हम उसको रिकॉर्ड करना ही भूल गए. और मिसस्टेटमेंट, wrongly recorded, not recorded properly. wrongly recorded. Omission not recorded, misstatement wrongly recorded. Then in that case, the materiality is compromised. And if the materiality is compromised, that means users cannot take informed decisions based on financials. Substance over form. Example of leasing. You are not the owner, but still you need to record leased assets as an asset. Because the substance says that it is present, it is giving economic benefit, economic usage, and you have already the control till the time the lease period is there. So that is giving me substance over form. Substance over form means legality is not important. Other aspects we need to consider while recording the transaction. If information to be presented faithfully, the economic, because it is derived from the faithful, the fundamental character, this is derived from relevance. This is derived from faithful. This is derived from faithful presentation. Those which are fundamental characteristics, these two are derived from that. Going concern. My business, Saraf Academy, never going to over. If suppose any time any business is going to, not only company, so sole proprietorship, partnership, any business is going to close. In the balance sheet, we record assets into two parts, non-current, long-term, current, short-term. But if the business is going to close, everything is short-term. Everything is going to be disposed. The distinction between assets because of going concern. The distinction between assets, non-current asset and current asset is because of going concern. A business starts will never end. It will continue forever. A business starts will never end. It will continue forever. Financial statements are presented on the basis that the going concern is valid. That means you have two types of assets. But when the going concern is no longer valid, all assets are current assets. All are going to be disposed. Business entity, whether it's a sole proprietorship, partnership company, the owner and the business is separate. Whatever owner is giving to the business, in the business it is a liability, capital, equity, whatever you say. This means that the financial information presented relates only to activities of the business, not. My personal transactions are not recorded in Saraf Academy books. If I am doing business in the name of Prakash Saraf, my personal transactions are not recorded in Prakash Saraf books because that is business books. Personal transactions are not coming in the business books, whether it's a company, whether it's a partnership or anybody, because separate entity. Accrual basis. Incomes and expenditures are recorded on due basis, accrual basis, not on receipt or payment basis. This means that the transaction recorded when revenues are earned, even though there is a credit sale, recorded. Even though there is a purchase on credit, recorded. This pays no regard to the timing of cash and receipts, accrual basis. Prudence. Prudence says that while recording expenditures and liability, you should be more open-ended. But while recording assets and income, you should be more stringent. Prudence is the exercise of caution. Exercise of caution when, not every time, when the situation demands. Ensuring that the assets and income are not overstated. Ensuring that assets and income are not overstated. Liabilities or expenditures are not understated. Suppose there is a court case going on. In the court case, I may lose the case. I may lose. If I will lose the case, I will be required to pay the other party penalty, fines or anything. When there are chances that I may lose, I should record the liability. I should record the expense. But if there are chances that I am going to win the case, chances na. Relating to income recording, assets recording, we need to be more sure. Relating to liability recording, expense recording, even there is a slight chance you need to record. Because accounts, we also say prudence means conservative. Prudence can also be said conservative. Whether you say prudence or you say conservative. Conservative means whenever you prepare books of accounts, for expenditures and liability, you need to be more ready. For incomes and expenditures, assets, you need to be more sure. While preparing books of accounts, that should be maintained. And consistency. If in a 1 year I am preparing books of accounts by following certain principles, certain policy, suppose depreciation, I am following depreciation straight line method. Next year WDV, again not allowed. Kahe ko? Why you are changing your policy every year different? Consistency. Don't change your policy principles from 1 year to another year. Otherwise, nobody will be able to compare your records from 1 year to another year. So if an investor, anybody, how they will be comparing your financials, how they will take informed decisions? They can't. Users of financial statement need to able they compare the performance of entity number of years. So classification and presentation of items included must be remained from one accounting period to another. आपको उनको सेम रखना है, उनको चेंज नहीं करना है. Policy should not be changed. There are rules where the policy can change, we will discuss. But आपको generally policy वगैरह change नहीं करना है. So what we are saying, this first topic is theory, which is saying basically what? Accounting. What is accounting? That is recording of transactions, then summarizing of the transactions. Under financial statement, these are the statements covered. The difference between financial and management accounting, internal, external, regulatory, no format, then past, present, future, this, that. Then types of entity where the accounting changing because of entity, sole trader, partnership, company. Then the framework. Under the framework, all other things. The framework, last framework developed in 2018. As per the framework, the objective of financial statement, characteristics, definition recording we have not discussed. Definition recording we will discuss in continuous all the topics. For objective of financial statement to be fulfilled, it should be following the law, it should be following the accounting standards, and the objective will be fulfilled when the users are able to fulfill their usage. For that, the elements are assets, liability, income, expenditures, equity. And in the elements and usage, we need to incorporate characteristics. Fundamental characteristics, which is relevance and faithful representation. And enhancing characteristics, comparability, verifiability, understandability, and timeliness. And then some other concepts which are not written as framework, but some other concepts which are materiality, substance over form, going concern, business entity, accrual concept, prudence and consistency. In your entire accounting subject, if somebody will say as a student theory is this topic and one more topic. One more topic is basically IAS, IFRS, international reporting standard, regulatory body, and slightly corporate governance. That there are two topics, but they are covered in one class. That is one another area of theory. But other than that, there is no theory. But then in the exam, when the question will be coming, more than 50% will be theory. From this topic which we discussed, maybe 2-3 questions comes. Out of 50 questions, maybe 3 questions, 4 questions. But out of 50, more than 25 will be theory. So from other topic which are numericals, भर के theory. But this is a theoretical topic which is before starting accounting, we need to understand what is accounting, why it is required, what is the purpose, what are the characteristics of accounting, what is an asset, what is a liability, what is income, what is expenditure, what is equity, what are the basic principles and enhancing qualities or fundamental characteristics of accounting. Based on that, we can try these questions from Kaplan exam kit. But then we can try questions from other books also. Verifiability, I discussed 2 things. Direct, indirect. Direct means I will say that in Saraf Academy computer laptop. Computer anybody can see. That is called direct verifiability. Indirect, suppose Saraf Academy mein there is a purchase or sale. But how can I say that this purchase is correct? I will be going into purchase vouchers, ledgers and all that. That is indirect verifiability. So whatever is there in the financial statement that can be possible to be verified directly or indirectly, then only the financial statements are giving true and fair view. Accrual, neither in my business, neither in any business, the transactions are recorded when you pay money, when you receive money. Even though you are selling goods on credit, you will record sales. Even though you are purchasing goods or services on credit, you will record. So accrual means the transactions are recorded on accrual basis, on due basis for the period. They are not recorded when the payment is done or when the money is received. That is called accrual concept. Verifiability was enhancing characteristics, but accrual is just a concept, because sometimes technical question comes. These are other concepts, but verifiability, understandability, timeliness and comparability are enhancing characteristics, and fundamental characteristics are relevant and faithful representation. We are doing some of the questions from here, which actually you all will support me, whether wrong or right, whatever is the case, you all will support me. Let's see how many questions we can do. But let's start doing some questions which will help us to revise the entire concept, whatever we have done. First of all, question number 1 to 7. Now, this is the Kaplan exam kit. The Kaplan exam kit is opened. The Kaplan exam kit, when I gave in the class only mail to all of you in the last class. This is ACCA Google Drive. Under ACCA Google Drive FA-F3. Now the Kaplan exam kit you can see here. Study text Kaplan exam kit. This is the kit. You should download all the materials from here so that you can open. You don't have to go to Google Drive again and again. But this is there which I am opening in the class and I am using. The Kaplan exam kit. In the Kaplan exam kit, if you go in this page number, which is page number 6. For every chapter, what are the question number, page number in which you will get the question, the answer in page number written. They are saying context and purpose of financial reporting. In the context and purpose, I have not discussed everything, because there is one area which is related to tech regulatory thing. Who is IASB, International Accounting Standard Board, what are the other, that I have not discussed. So we will not be able to do 1 to 23 all. Some of the question we can't do. Qualitative characteristics we can do. So we have discussed only 1 to 30, some portion is left. For that reason I have mentioned 1 to 7. 8 number is related with the area which we have not studied. 9 number we have studied. 11 to 14 we have studied. 16 to 19 we have studied. 22 to 30 we can do. Some of the questions we can't do because that portion we have not studied in the chapter. So around 25 page. Question number 1. 1 to 7 we have discussed. The area 1 to 7 we have discussed. 1 to 7. Which of the following statement is true? Which of the following statement is true? The directors of a company are liable for any losses of the company. Whether which one, I am not asking anybody. Whether point number A is wrong or right. A director of a company are liable for any losses of the company. Whether point number A is wrong or right. Why no? Why? Directors are not liable for losses of the company. Can you give an example?